Well, the New Year's is right upon us, and a lot of you are thinking about, where am I going to hang my license next year where I'm going to find the most success? Well, let us help you out with that because we don't have a dog in the fight over here, guys. If you want to have a personal, independent, meaningful conversation with me and my team, all you have to do is click this banner right over there, and we will have that conversation. On with the show. So U.S. home prices hit the skids for the fourth straight month, meaning that $90,000 on that second that you wanted to take out is now going to be about $70,000 in value, and they're dropping like a kamikaze pilot. New data from Case-Shiller for October today shows that home values have fallen almost 4% from their peak 4 months ago, while Seattle and San Francisco have fallen 9% and 11% from their peaks in May. Pace of deceleration is slowing for the past 2 months now. But man, guys, do we still have more room to fall.
By the way, home prices dropping is a good thing for realtors. Inflation comes down and you get new and better talking points, then prices are higher than ever. How much over asking do you want to go? It's good. Now, additionally, lumber prices have fallen to 2022 lows, and that's also good. 1, lumber prices fell 4% to a new 2022 low on Monday as the commodity ends a losing year. 2, the latest decline in lumber prices came after home builder sentiment fell for the 12th month in a row. 3, a swift doubling of mortgage rates to as high as 7% put the housing market on edge this year.
But seriously, now New Year's is around the corner, and if you're going to fix something up or you're going to build something, your time to do it is right now because lumber prices are looking pretty good, my friends.
According to Bose George, the mortgage sector analyst at Keefe, Bruyette & Woods, rates are dropping, and that's a positive turn of events provided it keeps going. Our baseline is not for the Federal Reserve to cut next year. Spreads could even tighten a little bit, and then maybe you could get a mortgage rate that's 5.75 to 6%, something which will be a slightly positive benefit to the market, but not much.
I don't know if I agree with that guy there. I mean, seriously, falling down to 5.75 is a hell of a lot better than climbing up to 5.75. Does that make sense? And that's the direction that we're going right now, my friends. So maybe a little relief quicker than you initially thought, and maybe this will get enough of your buyers and refinancers off the fence to jump back in the mortgage game. I'm telling you, going down is a hell of a lot better than going up.
In spite of the massive downturn in the mortgage and real estate space, Ginnie Mae's mortgage-backed securities portfolio outstanding grew to a whopping $2.325 trillion in November of 2022, including $36 billion of total mortgage-backed securities insurance for the month of November, leading to $23 billion of net growth.
Ginnie is, of course, the backing for all your FHA, VA, and USDA loans, and when the FHA does good, housing generally does good because that means that we're truly serving underserved communities. Now, we need to do this because check out this graph. It speaks volumes, doesn't it? Here's the wealth of the top 1%. They're the red line at the top. And then look at everybody else. In particular, the bottom 49%. That's the yellow and that's the green. Now, if you don't think there's a problem with wage distribution in our country, I think you might be a little crazy right now.
Bigger problem, you might be asking yourself, what about the 50% that doesn't even show up on this graph? Well, here you go. The bottom 50% own almost no stocks and mutual funds, which is why a stock market swoon doesn't faze them. Most of their assets are their home and consumer durables, things like cars, appliances, electronics, and things that generally depreciate.
I mean, I get it. Let's give the lion's share to the entrepreneurs and the Gettys and the Rockefellers and all of them, but this isn't inherently good, is it? Here's another thought that just came out. The top 1% took over 15% of all income in 2021, and those numbers have only gotten worse in 2022. If we don't make ownership available to more folks, the wealth gap is going to continue this unsustainable path, and we'll just see more unrest in our cities. I hate to say it, but don't you get the feeling like a peaceful existence is kind of bursting at the seams right now? Think not? Did you see Buffalo a couple of nights ago? Or have you ever been to World Star Hip Hop? You'll realize that this problem, though not real for you, is real to other people in this world, and that's good enough to make this something that we all need to be concerned about. I hope this helps. Can't wait to see you. Till tomorrow.